holistic way of saying the aspirational aspect on not only Africa but all emerging markets is the same, right? The ambitions of a 13-year-old in Malaysia or, Nigeria or South Africa is no different. And of course, those perceptions have resulted in a far lower FDI in Africa compared to, let's say, Brazil, Russia, and so on. I think the last overview point is the shadow economies. It is our own view that the shadow economies, particularly in West Africa, are huge. Of course, when you look at IMF and World Bank stats, you don't see that because a lot of those economies are actually cash-driven. It's not economies like South Africa, as an example, where you've got high purchase, you've got 20-year bonds, and so on and so on. So the quality of the stats in actually capturing the economic activity is completely underrated. This is, again, I'm afraid, more stats, but just to give you an overview of the picture, it is still almost 14% of the world population. And if you look at the projected GDP, and there are as many numbers as the number of reports you can put your hands on, but I think there are very few people that would argue that by 2020, you're looking at almost $1.4 trillion of GDP. Mobile penetration is 50%. Just less than 10 years ago, it was in the single digits. And I'll show you a slide a bit later just to give you the impact of what can actually happen in this continent. There was a lot of discussion during the day, or certainly some of the sessions that I attended to listen to issues regarding fixed direct investment. And I think this graph does tell a picture that from 1990 to at least 2008, we almost hit $70 billion per annum of fixed direct investment. Obviously, at that point, we then had the global financial crisis, and one thing led to the next. And therefore, we've seen a bit of a decline. But certain behavioral patterns have created that jump. And those are the behavioral patterns that we need to try and consolidate, entrench going forward. Now, even though that graph was impressive, on a total global FDI basis, we're still looking at very low single digits. 14% of the world's population, but if you look at the amount of funds that are coming to a continent are very, 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 very low. And for the people sitting in this room, I don't think these figures are revealing anything that is absolutely new. And then there's the issue of perception. Again, generally, the rest of the world seems to have a far more positive perception. Europe and North America are the ones that seem to be quite undecided. And I think if you look at those bars, they are actually evidenced by real things on the ground. If you look at the Brazilians coming into Africa in quite a big way now, companies like Vale spending huge amounts of money on resources in Zambia, huge amount of money in Mozambique. I think it's almost $3 billion they're going to do to improve their port. Bharti spent close to $10 billion coming to the telecom sector, et cetera, et cetera. So I'm just saying these are not just purely academic, but we've seen very limited investment from the US and Europe into Africa. So there is a perception issue that we have to deal with that is different for different parts of the world. If you look at the growth, again, we see that similar to that FDI slide that I showed a bit earlier, there's significant growth in these countries. There are very few countries that are now below 5% GDP growth. Once again, we accept that the financial crisis has had some sort of impact, but generally, you can see, countries such as Angola, for instance, as soon as they came out of the war, we've seen absolutely explosive growth. The question that I asked a bit earlier is, what has caused that FDI to tick up from, let's say, the early 90s to the peak in 2008? And I think there are most probably three factors, and I'm not saying these factors are all the answers or are all the reasons for the change. But firstly, we're seeing huge urbanization on the African continent. Secondly, we have had far more transparent governments. I know there are certain countries where you'll find that hard to believe, but overall, compared to, let's say, the 70s, 80s, and early 90s, we've actually seen far more accountability, far more transparency, better regulation, okay? And of course, you add to that the commodities boom. And that is really what has actually created that increase in FDI. The third most important factor, which is going to change things, is the demographics. I think it was Charles spoke a bit earlier about the labor market and what will actually contribute to growth in that labor market. And as you can see from that graph on the right, in terms of a youthful population, relatively speaking, Africa has got the most youthful population. Therefore, we are going to see in the next sort of 10 to 20 years, right, those people being the largest growth into the consumer space. And we've got real evidence of that. If I take an example of Uganda, for instance, which has got a very, very youthful population, MTN has been in Uganda for almost 12 years now. And certainly the last results that I published at the end of March, which were results to December 2010, we were still growing subscribers and revenue in Uganda by almost 25% after 12 years. And the numbers are baffling because you say, well, where is this coming from? Because obviously when we did our business plan, we did the sizing, we said this is the addressable market in Uganda, and after 5 years we'd have petered out. I believe that the answer to why that is happening, it's that bottom line there, which is saying that you've got this huge, very youthful population. I forget, I think that's below 15 or something like that. And those people are coming into the consumer space, are starting to spend, and are starting to have all sorts of aspirational things that are transforming themselves into the huge demand that we're seeing in various sectors. I think it was Times Magazine or somebody else who also did a study on some of the highest growth countries, and it was quite interesting to see the number of African countries, not by size, but purely in terms of growth, that made it on the list. So the essence of that section is to say that for those who take the correct perspective on those first 4 slides I showed you, because you can only believe what you believe, the opportunity is quite significant. But the opportunity is not without its challenges. And those challenges, and I'm not saying they're exhaustive, but I would say they're governance, infrastructure, economies of scale, and then the whole issue of certainty, okay? I think if we start on governance, we have seen a very positive trend. If you look at most African countries in the 70s and 80s, and then what happened in the late 90s, you'll see that overall there has been some sort of improvement on the key matrices: inflation, debt, and budget balance. And then, of course, these are just purely numbers, but the key point here is people are inclined to feel that they need an election, Now, as to whether the election is fair, real, or imaginary is a different matter. In the 70s, they never felt that they needed an election. Once those people are elected, they felt a certain aspect or responsibility of accountability and delivery. And to some extent, that has helped us see these stats that we are now seeing on the continent. So the trend is definitely a very positive trend. Infrastructure, again, is a theme that has been touched on today in many aspects. I personally always like seeing this slide. I'm not too sure where we got the slide from, but that is a shot, obviously, from somewhere in the universe, just looking at energy and power and lights and so on at night. And again, I think it's very, 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 very clear. You see where the concentration is, and save for South Africa and a part of North Africa, the continent is in serious trouble from an energy perspective. It is in real dire need of power and resources. And I mean, we can do whatever we want to do with stats, but just to give you an example, just to try and put the numbers into perspective, Sub-Saharan Africa with almost 800 million people, you know, the power that's generated there is equivalent to what just Spain generates for a population of 45 million people. So if you stress test this, it really gives you a good sense of the scope of what needs to be done. Just to manage the infrastructure resources required for current reserves that are being exported and goods and services and so on, the continent should be investing almost $100 billion a year. Okay, they've only managed in 2008 about $45 billion. Okay, and I think the question that we really need to ask ourselves is, well, with all this opportunity, why are we having problems generating that FDI to cover, you know, the almost $100 billion a year, so that we can deal with one of our key shortfallings, which is the lack of infrastructure. So I think things are beginning to change, but this is a real major point. Because without infrastructure, a lot of what was discussed today and discussed in many forums like this ends up being completely academic. I mean, to give you an example, even South Africa, which supposedly has got a far more sophisticated infrastructure capability, effectively missed the commodities boom because there wasn't sufficient rail, there wasn't sufficient port, and so on. So I think for me, this is quite a cardinal point. This slide really shows you what happened in the mobile sector. Because I think, you know, it's quite exemplary on what could be done. And I'm not saying it's easy to just extrapolate one sector to another. There are many other complexities and so on. But effectively, what really happened is there were 36 million people around 2002 that had mobile phones on this continent. In less than 10 years, there's 500 million or over 500 million. When MTN got to Nigeria in 2001, the stat that I remember quite clearly was 600,000 lines for a population of 120 million people, right? Today in Nigeria, there's 60 million subscribers. So this really is what has been achieved in telecommunications. The question really is, can this be replicated into the other sectors, in energy, in infrastructure, and so on? And my answer to that, maybe prematurely, is yes, but it really needs the private sector to drive it. Commodity production, I mean, you all know these numbers. Certainly, 10% of the world's oil is now on the continent, and the oil discovery in terms of reserves in Africa is growing at quite a rapid pace. 80% of the world's platinum, et cetera, et cetera. So I don't think that there's any issue as far as the resources are concerned. In fact, it's really the opposite. The third point that I made was economies of scale. These numbers always look very interesting, and I don't want to really talk about telecommunications because that's my bias, but there were quite a number of things that we learned. The first one is, whenever you hear, with all due respect, politicians talking about billion people in Africa, billion people in India, why can't we do this, why can't we do that? The big challenge here is the fact that a lot of this infrastructure is not economically bankable, because in India you're talking a billion people, over a billion people in one country. Here it's a billion people in 52 countries. And I think the previous speaker actually dealt with this aspect. To say that until we've got meaningful regional cooperation on infrastructure, it is going to be very difficult or virtually impossible to put in place some of the major pieces of infrastructure that can actually allow the continent to realize the 10% growth or more. Now, this is unfortunately a very political issue, because even if somebody's got a little kraal and 2 cattle, that's my turf. This pipeline will not pass here, et cetera, et cetera, et cetera. And therefore depriving a certain part of the continent with the region from realizing the revenue. I must say, if I listen to quite a lot of forums, the AU forums and so on, it is a bit encouraging, because there's now more discussion about roads. They used to speak about Cape to Cairo many, many years ago, except it was the wrong person speaking about it at the time. But they are now talking about it in a far more constructive way of saying, how do we look at infrastructure from regional perspective, as opposed to looking at it from a country perspective? Because the configuration of the 52 countries makes some of these projects almost impossible. And I'm not saying that there aren't that can be done, self-fulfilling, but most of them require that cooperation. As we sit here today, there is, as an example, a far stronger commercial imperative to have the movement of export out of the Highveld in South Africa via the port of Mozambique, rather than going all the way to Durban, right? But there needs to be the political will to do that. The port in Mozambique would have to be developed, et cetera, et cetera, et cetera. And once that it's done, the economics of it become very, very different. So I think this is quite a major area that has to be looked at. Then I think the last section that I spoke about, in terms of what are the challenges that we have to overcome, it's this whole issue of certainty, which is quite a long subject in itself. The reality is nobody is going to lend you money. I sat in a section this morning where somebody was talking about oil fields and so on, saying, but where's the money? How do you secure this money? And the reality is that it all comes down to certainty from a regulatory perspective. If I have a 20-year license for mobile telephony, it must be a 20-year license. It can't be an issue of a change of government. Somebody wakes up in the morning and says, oh, by the way, I think this license should be 10 years, or there's another tax, et cetera, et cetera. So there are many aspects that go to the regulatory and political aspects, of it. Of course, without that cornerstone of investment, we then are unlikely to see, the FDI. So this is in some respects, not within our control. It's very much within the political arena, but it's actually a key feature in seeing that FDI. I think it's also a key feature in reducing the spreads. Somebody spoke this morning to say that, in Africa you still have very high spreads on bonds and loans and so on. It all comes back to this particular point. So the next phase of growth, I think, is definitely, within our grasp. But it's really all those elements that I spoke about that needs to be put into a cogent, formation, whether it's by business and politics, to actually realize even higher growth than those slides that I showed a bit earlier. I think if it comes to the lessons, these are lessons that we've learned. We are not saying that therefore this applies to everybody. The first one really is the fact that, of course, there's no one size fits all. The approach that certainly we have had over the last 10 years is very, very, very different for each country. There are some similarities, there are some things that are really underlying premises, but by and large, we've really approached every country with a fairly different approach in terms of how we deal with the markets and government and so on. I think MTN, as an example, and I can give many other companies that have made a significant amount of money on this continent, shows that there is a difference between what today is the perception and what is the reality. I haven't read the document, but those who are following the resources sector may have seen the prospectus published by Glencore for the prospective listing in a few weeks' time. I think it's a 1,600-page prospectus. This will be the largest listing on the LSE for, I think, 20 years or something like that. And I think what you'll find very interesting in that prospectus is really the amount of business and resources that is coming out of the very same continent where there is such a deep and dull perception of. So I don't want to really, beat the horse to death here, but I'm just saying it comes back to the issue of perception, in the sense that those people have been doing business for a very long time on this continent in the most difficult countries, and can actually have the largest listing. And I'm not saying it's solely out of Africa. Of course, there's South America, there's Central America, there's the Asia, and so on. But it just puts into perspective how we see risks and how other people have seen the risks. So that paradigm shift becomes, fairly important. And I'd like to believe that our lesson was one that happened earlier. And not only in Africa, MTN went to West Africa, East Africa, and then eventually into the Middle East, into Iran and Afghanistan and Syria and so on. And again, if we had held back because of purely of the perception, I don't think we'd have made that leap into the Middle East. Third point, of course, is the issue of professionalism and staff and so on. And again, this morning I had many themes of this very, very important point. We've tried our best to get the best possible people in the world. Of course, the company started in South Africa, therefore it's got quite a lot of DNA in South Africa. But today we've got over 50, 60 nationalities working in virtually all the countries. Cross-pollination, there are Nigerians working in Iran, there are Pakistanis working in South Africa, and so on and so on. So that has been a strength of ours in terms of the diversity of the staff, the quality, the professionalism, and so on. There is another element which is always very difficult to talk about because people have different views of it. But it's an issue of approach. I think one of the key attributes that new companies or new age emerging market companies ought to have is to approach the politics in certain countries very differently. And by that, I'm saying there should be less of a paternalistic approach, which is what we've seen in the last 50 years. And we have found that that has enabled the company to become a very integrated member of that society, as opposed to being seen as an outsider coming there to take profits and so on. Not to say we don't take profits. Of course we take profits. Of course we pay dividends. But I think we've made a concerted effort to be highly integrated into those countries. And that's something that is very important. And then I think lastly, it's all about passion. To have the kind of people working in some of the most difficult of geographies. They could only do it because of the passion. We've lost members that have been kidnapped in countries like Afghanistan and so on. But we're there because really there was an absolute passion about the business and what the business can achieve. So I think those are sort of the few things that we have learned and have tried to expedite and really pass on within the group over a 10-year period. So I think to conclude, firstly, I just want to say the whole worldview is central to business today. And I don't think that you can easily disassociate those things. If you start off with seeing the emerging markets or Africa in particular as one of those 4 slides, let's say the third one, I think it self-perpetuates. But if you put yourself on a historical sort of timeline in terms of Africans' importance, not only for the last 2,000 years, but before that, you do have a different mindset. The resources are there. Whether you want to go back to Belgium and the enormous profitability out of the likes of DRC and so on, it's 2011, but we're still seeing the same picture, by and large, is that the resources, development, and growth is really not by any African-based companies. Even though we may have done a little thing in telecommunications, I do think that an African-based resources company has become an absolute fundamental. Of course, today we're changing resources, we're selling resources for roads and bridges and other things. The demographics, those are stats that everybody sees every day. Everything has shifted eastwards. I always give people the example that, pre-2008, if you believed that some of the sovereign wealth funds will own Citibank and JP Morgan and so on, people have thought that that was impossible. But the reality is that that is really where the economic shift has been. And of course, the demographics support that. The question is, what is Africa's role in that whole movement? Are we sitting and being bystanders and watchers, or do we have a particular vision and structure to actually participate? So I think the surge, as I call it, can really only happen if we have a very long-term vision and some planning. And in the absence of African-owned control companies, and I'm not talking about this in a narrow sense of the word, but really in a broad sense of the word, I do think that we will have many conferences, many discussions, but the train will essentially pass us by. I am hopeful in the sense that in the last sort of 10 years, certainly there are a lot of, shall I say, people in their 20s to 35 and 40 that are now coming out of university, and the first question they ask is, how can I start a company? Not, which company can I work for? And I think there's a fundamental difference in that. Education, of course, that was also emphasized, that to put that plan in place, to deal with those 4 cardinal points that I mentioned, without the capital or intellectual capital, it's quite difficult to move forward. I can talk about South Africa, a country that I know very well. The country needs to import almost 400 engineers every year just to do fundamental things in infrastructure. So the whole issue of education and the long-term planning of that, it cannot be overemphasized, and I'm sure I'm talking to the converted in that. And finally, let me say that maybe our role in a little way, certainly what we've done is try to utilize whatever resources we have, try and solicit support from the politicians to play our own role. Nobody's going to fix everything overnight, but I do think that when you have fora such as this and people coming out of this sort of institution. And I must say I was actually very happy to hear about the repatriation in the session earlier. A lot of this becomes possible. Thank you very much. Thanks, thank you. Want me to take questions? Okay. All right.
Thank you very much for your very interesting presentation. My name is Halim. I work with these young minds. Yep. I had the opportunity of meeting Charles Mbiri, who is the chairman of MTN in Uganda, yep. 2 years ago. And he said that when they were setting up MTN in Uganda, that most of the projections was exceeded on that same day that they started MTN, that they, flooded the infrastructure on ground because the projections were wrong. So following on your presentation, do you think that 2010 results of Uganda is based on, the nice results of Uganda is based on the informal sector, which is not taken on board when making projections in terms of, I could see from one of your slides that you referred to a lot of people in Africa living below $1 a day. And we all know that there are a lot of Africans that are living above that, but it's not documented because of the informal sector. That's the first question. And the second question is, MTN obviously is a very successful organization in Africa. What are you doing to, I'm going to ask you the same question I asked Dominic, the global CEO of McKinsey, when he came to George Business School. What are you doing towards making sure that in 20 years' time, MTN will continue to be a global brand, continue to exist, would not, cease to be what it is today?
Okay, I think the second question I understood. The first question I didn't fully understand. Do you want to just ask that question again, just brief?
Okay. The question is, to what extent has the size of the informal sector contributed to the fabulous result in Uganda, fabulous growth result in Uganda?
Okay, all right. Okay, I think on the first question, you may recall that I said my own personal view is that the shadow economies in these countries are quite underestimated. And they're quite underestimated because informal in Africa by and large means a cash economy. And they're actually sub-economies within economies. And that has happened, particularly in West Africa. I think it's very, very strong. So the answer is yes. Those informal economies have really contributed. Because if you look at the formal economy, which tends to be government, I'm not saying exclusively, it varies country from country, but by and large, government tends to be the biggest employer. It could not have generated and kept MTN Uganda, as an example, going for 12 years with the kind of growth it has seen, right? So A, it's the informal economy, but B, it's also the youth, okay, which is becoming increasingly a large percentage of the total population that is actually driving that. On your second question about how is MTN sustainable, first of all, I think it's governance. I do believe that if you can't get governance right, whether it's a company or a country, the wheels are going to come off. We have been absolutely stringent in how we've dealt with those issues. We've gone to a number of countries. When you say, listen, we must have an audit committee and a risk committee and an HR committee, I say, what? What are you guys talking about? You know, what do you want, you know? And we'd insist, and we'd do it. We've been in countries where people say, no, but MTN, you must have broken some of your ethics. We can't believe that you could have done this business in A, B, C, D without, you know, playing under the table. And we say the absolute truth is we didn't. Now, in some countries, it made us extremely unpopular for the first 2-3 years. In fact, there are some countries where we're on the verge of being kicked out because we just refused to play the game that people had been playing for 50 years. But you know, in the end, it paid dividends because people then got to understand that MTN would only do business on this code, on these ethics, and it's either you take it or you don't take it, okay? Now, I'm not saying people don't do funny things. I mean, with 21 countries, you know, who knows, there'll always be somebody within the company who does something. But really, as a unbending philosophy of the company, we played it straight. And I think over 10 years, it's finally paid out. Okay. Look, it's not saturated. Well, first of all, let me start it this way. All the predictions on the addressable market and the growth of telecoms on the African continent have been absolutely wrong. And I'm not talking about outsiders, I'm talking about our own business plans, all right? You know, if you look at South Africa, for instance, when mobile started, they said, listen, we'll have 5 million subscribers. Okay, when we went into Nigeria, we'll say by 2012, the whole market will be like 12 million subscribers. Today, there's 60 million subscribers, et cetera, et cetera, et cetera. We went into Iran. We achieved in Iran in, let's say, 3-4 years what it took us 16 years to achieve in South Africa. So the market is not saturated. Having said that, the market obviously is slowing down. Because, I mean, as you've seen on that slide, there's now 550 or 40 million subscribers on a population of, let's say, 800 million, right? So there's still quite a long ways to go. But that other 300, 400 million, you cannot get because they cannot afford. So we need to restructure our business such that they can afford. And the way to do that is we need to have lower OPEX, lower CAPEX, and so on, things like infrastructure sharing, et cetera, et cetera, et cetera, so that we can deliver the service at a much affordable and lower cost and get that other 400 into the net. So the simple answer is no, it's not saturated. Yes, it's slowed down because you've now got the first 500 who could afford, and I'm really being simplistic now. But I think over time, as we try and improve our cost base, we'll be able to get more and more people in. Okay.
Good afternoon. Thank you very much for the presentation. My question to you is more from the perspective of how you make a decision as a business leader. We've had a number of people from the finance sectors talk today about how they look at the opportunities in Africa and how they hedge the risks or make decisions on where to put their investment funds, knowing that some will be successful and some will fail. When you're in an MTN and you're betting pretty much the farm to make investments in a number of markets, and others have decided not to go into those markets, I guess the question is, how do you as an individual satisfy yourself that you're making the right choices? The information is poor, the perception is bad, everything's screaming, don't do it, but how do you satisfy yourself as an individual and go to bed at night?
Yeah, look, I think I must say it's with great difficulty because, the decisions are never easy. There are certain things that we've done right and made the right calls, and there are certain things that we've got wrong. But if you are really talking about process, I think the process it's really got a number of elements to it. I think firstly, you start off by listening to the guys that really irritate you, all right? Because invariably, I always find that is a natural stress test for whatever you want to do. And in any organization, private companies involved, there'll always be doubters. If we're going to go into country A, there'll be half the ExCo team, saying, let's go, and there'll be some of them who are saying, this is a bad idea. And I think just getting to listen to those people that actually are the detractors is very, very important. And then the rest is quite mechanical. I'm not saying easy, but quite mechanical. I mean, we've got our own yardsticks in terms of what sort of penetration, we are still prepared to go into the country. If the country is 80% penetrated, why go in? We look at the regulatory environment, as I mentioned in one of the slides, to say that, is this license going to last? I won't mention countries' names. There's some countries where the regulator wakes up in the morning and say, I think we need an education tax, okay? The next thing, 3% of your top line is gone. In that sort of country, you tick the regulatory box and say, it's really, really tough. We cannot do that. Then it's affordability and so on and so on. And then quite a bit of it is gut feel. You need to go through the mechanical aspects of it. You need to be open-minded and ask more questions of your own people rather than telling them what to do, and get the answers by asking them questions. And then you make a call. So it's a fairly involved process, like any company, particularly for a listed one. You've got a board that itself will not always be on the same page. You'll always have detractors on the board. I think everybody has got their own Mr. or Mrs. No, irrespective of what the opportunity might be.
Hi, my name is Oyinda Oshino, and I run a retail e-commerce business in Nigeria that we've successfully basically built into a national business, and ultimately my dream is to make it a Pan-African business. However, we are facing significant constraints, some of which you have mentioned, the infrastructure and so on and so forth. And my belief is that an organization like MTN that has such a breadth of exposure across the continent is in a prime position to basically help like small businesses like mine maybe overcome some of those challenges. My question is, are there any initiatives or any services that MTN as a company is pioneering to basically encourage more intra-African commerce? Because you made a very valid point about the fact that because there's so many different economies in different places, it's very difficult to get economies of scale. For example, your mobile banking service, are you basically pushing to make any of these services basically less location dependent so that it is possible for companies in different parts of Africa to actually interact and trade with one another?
Okay. Maybe just for record, let me just say, A, I can't talk for MTN anymore because that ended on the 31st of March. B, I think that opening slide wasn't quite correct. I'm not yet chairman of MTN. I'm nothing at MTN today. I might become that in a few months' time. So having said that, MTN is doing quite a bit to try and create that cross-continental divide. And again, we are driven by business principles. It's not because we think it's a good thing to do and so on. Of course we think it's a good thing to do, but that's not what's driving it. What is driving it is simply something that says if somebody's going from Lagos to Accra and they need to roam, they just need to not change their SIM card or do something. We need to facilitate that. They must be able to use the cell phone in Accra. They need to be able to top up time in Accra using their number, et cetera, et cetera. So there's quite a lot of that is happening. Mobile money as well. We are essentially, obviously, we starting off inside, just on a domestic basis. And in some cases, we've had to fight quite hard because some countries say, listen, you guys are now getting into banking. We gave you a mobile license. We never gave you a banking license. So come and talk to us. So they've held up the process.